All right. Well, good morning to a lot of you. Good afternoon to some, and probably good night or good evening at the very least. Aaref, thanks very much for joining. It's been great to have got to know you since I moved to the Bay Area and got involved in venture. You've been instrumental in definitely upgrading and helping me navigate my career. So I couldn't be more grateful both for guidance, coaching, part mentorship, and part friend and part advisor. So all of those combined.
I mean, first of all, it's wonderful to be here, and I really appreciate the invitation. And then secondly, also, I've learned as much or more from you than you have from me. So it's been very much a two-way thing.
I'll remain your unofficial intern, so anything you need, I will continue to do that. Let's get started. So people are aware of your background. I don't want to, with respect, get you into being able to speak and speak about that because we've read it all. You've been on the founder side. You've led not one but two companies. You've had successful exits as a result of that. And of course, you worked at Sequoia and now at Bain Capital, so you've seen it from multiple angles. A lot of people attending today and listening today could really value what you've seen, the lessons you've learned, and also how you're seeing kind of both the market and the environment in the time ahead. So perhaps, part of the Park Launch platform has been able to provide a community for hundreds of thousands of founders from Pakistan. Events have been held in Dubai, London. There's one coming up right now in Riyadh. Of course, we've done one in the Bay Area. And there's no shortage of navigation through a tough environment, especially over the last few years. So maybe my first question is, if you were a founder, just talk a little bit about the story of both Clearwell and CenterRun. But what are the core lessons that you learned from being part of an early stage company and building from the ground up, and how you kind of apply those today, or at least give guidance to founders from your experience?
Yeah, sure. No, happy to. And for me, at least, being an entrepreneur was a searing experience. So it's something I kind of carry with me every day. Just to fill in a little bit of my background, just not the resume bits, but just because how our experience, we are a product of our experiences. I'm originally from Pakistan. My family's from Karachi. I grew up in London. I did not think much about technology growing up. I did not think I'd be an entrepreneur. I wasn't one of these people building lemonade stands or writing code. And it was only when when I came to America that I became, I think, just more aware of what's possible, and that's what led me to think about starting a company. As you mentioned, I worked on these two companies over a total of 10 years. The first company was kind of like 3 years, where I was a first-time founder and completely clueless, and made a whole bunch of very basic mistakes. It's really a miracle the thing worked out, frankly. I mean, we raised about 10 million. We're in business for 2-3 years. We sold for about 70 million after building a 20-person team and getting a few million in revenue. But it left me feeling feeling like I'd messed it up, but I really wanted to build a proper company. And so then started the second company, Clearwell, which was in a different area. The first one was infrastructure software. The second one was an application. And in that second one, I just felt much more confident of my judgment and what I was doing. And that one, we're in business for about 6 years. We grew from 0 to 100 million in ARR. I felt we dominated our market, and for a bunch of complicated reasons, we ended up selling the company. So there were two very different experiences. To answer your question, in terms of the things some of the lessons that I take away from it, I think there are probably 4 or 5 things. I can talk more about any of these, but I'll just mention them, and I did. First one is, if you can avoid it, don't start a company. It's really hard.
So let me stop you there for a second. What was the spark for you to start that first company?
The first company, I was working at an internet company, And part of me felt if these jokers could do it, anyone can, because the place was completely mental. And then I was just determined. So I just spent my time, in my job, looking at different problem areas.
Right.
And I stumbled into one that I thought had real potential. And at the time, we were building out data centers. There was a lot of things not working properly in the data center. I won't go into the details because they're not relevant to today, because technology's moved on. And so I just felt like, okay, there's something here that we can do. And I was shocked no one else was doing it.
Right.
And so that's what led me to then quit and my job and work on it full time and try and recruit co-founders. But I feel like starting a company is an involuntary thing. It's sort of, you come across something that you feel should exist and you feel compelled to try and make it exist because no one else, you don't see other people doing it. Now, in practice, there are always other people working on things. That's fine.
Right.
I wouldn't worry too much about that. But at least in your mind's eye, you have this clear picture of how things should be and how you can drive them. And so that I think is that's the reason to start a company.
So if you keep going, you were talking about the lessons that you said the first one was don't start a company.
Yeah, the second one is that if you do it, then just know it's grueling and gut wrenching, wonderful when it works, but just incredibly hard, and it's potentially a 10-year journey in which nothing goes to plan. So I don't think you can go into it with the mindset people have when they take a job. In a job, people go into it and they say, I'll be here 2 to 4 years, I'll learn a lot, I'll do good work, I'll progress my career, then I'll think about what's next. And when you start a company, I think it's more, this is the thing I want to dedicate my life to for the next 5 to 10 years. And for the first years, you almost have to reserve judgment, because so another learning for me is when you started a company, and this happened with me and this happened with the companies I've worked with as a venture investor, everyone doubts it. I mean, either they kind of wave at it from a distance and they'll go, oh yeah, that sounds great. Yeah, good luck with that. Or they feel it's not going to work. And
Right.
And so you get hit with that over and over and over again for years. And you yourself, of course, as a normal person, you're going to have your own doubts until suddenly things flip and it becomes obvious. And this has happened to me a couple of times, like Clary, which is a company that I incubated when I was at Sequoia. Everyone it's doing, I mean, it's AI applied to sales and sales forecasting. Everyone said, well, doesn't Salesforce do that? If I have Salesforce, why do I need this? I mean, what does this need? Years of that. And then suddenly overnight it flipped to, well, of course I need a sales tech stack alongside Salesforce. And I don't just need Clary. I might need Gong. I might need Outreach. There's a whole bunch of other things I might need. And it literally just kind of like flipped overnight. Another company, Garden Health, where we were lucky enough to invest, and I served on the board. We invested at the Series A, and the company now is a public company and has done very well. This was a liquid biopsy, so it's a blood test for early detection of cancer. And the similar thing happened there. For many years, people would say, well, this is a one-time test, it's one and done, it's a commodity. The government won't pay for it, no one's going to approve it. Why do we need it? And then suddenly again, things flipped, and well, why, of course you need this, and why would you want to take a tissue sample if you can do a blood test? And things flipped as we got FDA approval and stuff. And so this is why I say that you just have to prepare yourself in starting a company for this multi-year journey. It's a higher level of commitment where people and just accept that people will doubt you for a long time, but when it changes, when it flips, and this is like when you hit product market fit, it doesn't happen gradually, it can happen very suddenly. So
Right.
you can be nowhere, and the next month you can be being propelled along by the zeitgeist, and metrics are improving and sales are going up and everyone's interested. Just last week in AI, this happened to a company called Grok, which is a company started in 2016 that has been going for a long time and everyone thought wasn't particularly promising. And now in the last week, people have suddenly woken up to, wow, okay, well, they're very relevant to AI in a specific way. And so now it's a very interesting company to many people. And so So you just have to be ready for that. So that's the second thing I'd say as you think about starting a company. Third, when you're starting a company, the most important thing I feel when you're starting this company is to get like-minded people around you and create a nucleus of people who just can execute and enjoy working together and can drive things. And part of it is, you can call it the building culture, you can call it building the bone structure of the company. It's a combination of things, but you got to create that really strong nucleus, because that's what sustains you through the hard times.
Can I just interrupt there? Because I think just to go a little deeper for everyone's knowledge. I mean, the companies mentioned, Clary's a unicorn. Guardant Health went to becoming a public company and still is doing substantially well. I've met the team there and know the CIO super well. The nucleus of people, that's been pretty consistent, at least from my vantage point, pretty much throughout the last 10, 15 years of your life. You think about people you went to business school with, to be able to be be involved in their company. There was, of course, a connection. My understanding is in terms of the founding team at Clary and
Yeah.
their association with CenterRun or Clearwell. So there has been you've seen your kind of, I wouldn't call it tribe, but kind of like-minded group of people with kind of the DNA. Is that fair to say that that's something that people really need to build over time in terms of not just the team, but kind of their community? Is that?
Yeah, 100%. Now there's a balance there. You're not closed to new people. So, but yes, 100%. As you find like-minded people who you enjoy working with, you want to move with them through life and continue working with them as much as you can through multiple companies or multiple situations or whatever it is. So yes.
When you think about the founding team, whether it's founders that you've met, founding teams that you've met, also having been a founder yourself, how does that team formation look? I see this all the time, and having met with a number of companies who are founders who are very good technically, are looking for a good co-founder and likely to basically hire another technical co-founder because that's what they search for. Maybe that's not what they need. Could you just talk a little bit about kind of, not necessarily a formula, but how people should think about, when they're building early stage journeys, what that founding team should look like and how you form it?
Yeah, I mean, ideally you have people with shared values and complementary skills. That's what I went in my first company. I had a very strong product person, Basil, who was excellent, and then a great young engineer, Mike. And they're both great people. Basil went on to a senior role in VMware later. Mike became CTO at Facebook and was one of the top 3 people there for many years. I didn't know either of them before starting the company. So I don't think you have to start a company with friends, but you're looking for shared values and complementary skills. Now, how do you find that out about someone when you first meet them is really hard. To some extent, you can talk to them. I have found it's experiential, that more than talking to them, working with them is better. And so before committing to starting a company with someone, I mean, I would just work with them, come and let's just sit next to each other, work on stuff, chat about things, try and figure some things out together and get a feel for what it's like. I found this is an experiential thing. It is not how smart you are. It's not a puzzle to figure out.
Right. So key thing is not just being able to actually think about complementary skill sets, what each of them are going to do, but being able to actually see how you work together and figure out the platform, because you're going to be doing it for 5-10 years.
You got to have shared values. I mean, I values are, I know it's kind of a squidgy thing, and you probably, I never thought of myself as having values, but we all do. We all do. You got to understand how they mesh with other people.
Appreciate that. So, so you've had 2 exits, founding a company, being CEO, being able to build companies from the ground up. Both of them were funded by Sequoia.
That's correct.
Yeah. And then Sequoia decided, well, maybe it's time you come onto this side of the table. You were at Sequoia for several years. You've done over a dozen plus investments. A number of them went public. A number of them went into unicorn territory. You met now at Bain as an investor. You've met tons of founders. So maybe I think it's important. Inspiration is important for a market, especially an early market like Pakistan, where they say, well, what is a good example? There's lots of great of those examples in Pakistan in different sectors, but probably not as much in technology. I mean, there are, of course, Mudassir and others with Kareem. Tell us about some of the founders that really stood out for you.
Yeah, no, I mean, in the time I've been in venture, I've been lucky to have met many incredible founders that that we've backed, that my firms have backed, including, Stripe, Airbnb, Nubank, WhatsApp, Zoom, Figma. We've passed on a bunch that we wish we'd invested in at an early stage, including Canva, Snowflake at the early stage, Zoom at an early stage. There are just a handful of meetings though that really stand out in your mind, or a handful of people who really stand out in your mind. Then you're left wondering afterwards, like, what is it about them?
Right.
And it's different in every case. I'll say there's tremendous talent in Pakistan, and I feel that whenever I visit Pakistan. I feel that with Pakistanis who come to America and start companies. To give you a specific example of a Pakistani who started a company and has done an incredible job is Ahmed Kheshgi, who I think you know, right, Yousuf? Who's yeah, and so he'd only been in America for 3 or 4 years, and started a company. This is a long time ago, called Square Trade. And at the time, Square Trade was doing dispute resolution on eBay, which was a good idea for the early 2000s, except eBay basically decided to crush that business and deal with it themselves. And so he was then 6-7 years in, and his business had been just devastated. And he had to come up with something new. And so he, together with his team, scrambled and came up with the idea of consumer warranties, and what a broken market that was, and how he'd provide consumer warranties that actually worked. And over the next 7-8 years, he built the business up from zero back up to the point where a large insurance company, Allstate, bought it for $1.6 billion. And so, what I admire about it, it's not a famous, perhaps not a famous story, but it just shows the tenacity. It shows the kind of like, if you imagine working on something for 6 years and getting kind of like crushed and having to start again, and having that inner resolve and energy to come back and then build a successful company. And they're the people who you look at and you go, wow, that's kind of, because sometimes people can capture lightning in a bottle. That's the exception. The norm is someone has to really, it takes time to find that thing. I mean, a second example from Sequoia. So Ahmed Kheshgi is a Bain Capital Ventures example. A Sequoia example would be this really smart young guy we met as he came out of Harvard, who had this idea of creating a toy company with the iPhone as its brain. And we thought, what a terrible idea, but what an amazing person. And so we backed the company. The idea was a disaster, but he then evolved it into a drone company. Now, no one was allowed to fly drones in America, so he went to Rwanda and started doing medicine delivery in Rwanda, and has grown that company called Zipline now to the point where it's back in the US and doing deliveries for all sorts of things. And I think will be a very significant company. And again, this is it's the energy, it's the creativity, the drive of just one person or a small group of people to just make the thing happen. And he went through, I mean, he had to recap the company at one point. So these are the entrepreneurs who stand out for me, the ones who've really overcome hardship.
Sorry, keep going.
Well, no, I can pause. I can go on.
Yeah, no, I was going to ask. So one thing is, that's interesting. You mentioned that it's maybe a terrible idea, but the founder has just got tremendous energy and you sort of back it. But even with Zipline, that went through quite a bit of turbulence, as you mentioned, in terms of recap. I guess the question with that in mind is, this market environment has, the level of fluctuation definitively, I think, over the last 3 years from 2020 onwards, been kind of ridiculous. In whether it's the volume that's being invested at the seed or Series A level, the number of down rounds that happened definitively over the course of last year. As an investor, I guess first part of that question is, what would, when you recap a company or whether you double down on a company, is it ultimately about the founder's will and energy? Because the data point first tells you is, well, they haven't done very well, or they clearly haven't executed. So what, because there's a lot of people who be like, well, I don't have the metrics, I'm just going to give on up. But clearly there's an ability for them to articulate their story about what the time ahead looks like, which resonate with you and other investors to sort of back companies and founders who weren't standout successes from the first chapter. So tell us a little bit about, got your perspective on that.
Yeah, you just have to have a forward-looking view. If Keller had come back going, I'm going to build a better toy company, and we just didn't build a good enough toy, and that was the problem, we probably wouldn't have. It's hard to back that when you think, the toy is not going to work. But you come back with something different, having evolved, and yeah, then you still like the person. Very often at the earlier stages, I mean, I almost reserve judgment on the idea, because people tend not to change. Ideas change tremendously, and so it's I feel like at the earlier stages, investing is about exceptional people with acceptable ideas, and then you're counting on the exceptional person to evolve the idea into something meaningful over time.
Well, I mean, there's an interesting question that came up on the chat, but also comes into, for this audience, if you think about it. A lot of companies, I mean, I interviewed Tim Draper earlier, and he had mentioned, and I said, well, look, what's your perspective on, because he was investing in emerging and growth markets way before most people. I mean, in 1999, he raised a sizable fund to invest all over the world. And one of the things I asked him about how, and I know you don't actively make investments in Pakistan because of just the scope of Bain or otherwise, but I guess the question is, when you think about the TAM for particular products, whether it was the toy company or iPhone Brain or others, how do founders need to think about TAM from an investment perspective? I've always found that this is one of the hardest things for people to be able to kind of scope out. It's a question that people have asked. If you're a founder in Pakistan, that is your target market, at least initially. And it may not be immediately attractive from an investable standpoint, or it may be, but just, can you talk about just TAM, just sizing and thinking for founders when they're pitching?
Yeah, sure. I think this is, I mean, what I'll say, I think is applicable to founders in any country, not necessarily just Pakistan, which is the best companies attack a small market today that becomes a big market tomorrow. If it were a big market today, there'd be a big company doing it. If it's a small market today that remains a small market tomorrow, then you're going to be killing yourself for a couple of million in revenues not suitable for venture investment. So it's really, how do you tell the story, or what makes you believe that this, what is by definition a small market today, will become a big market tomorrow? And what doesn't work as well for me, well, Gartner or some analyst said it's a big market. I mean, that's just, not very credible. Those guys just make up numbers. BCG said, or McKinsey said this, or,
right.
I'm kind of like, if it's, those numbers aren't correct. What is credible to me is a kind of intuitive understanding for, is this something that a large number of people will pay a little for, or a smaller number of people will pay a lot for? And so if it's a small number of people who pay a lot, then it's kind of understanding, well, what is the value of an account? How would you price it today? What kind of value would you capture? For value capture, humans are actually very bad at deciding things on an absolute basis. We're trained to do things on a relative basis. And so having an understanding of what your product gets compared against and how much value it produces compared to those benchmarks is very reassuring to an investor that, you know, you kind of like know what you, or if it's the other one, if it's a large number of people who are paying a little, then who are these large number of people and how would you find them? And, you know, what are they, just how would you acquire them or attract them, and what would make them want to adopt this? And so showing that today and then expanding it tomorrow. So it might be, well, today we're gonna, so to take an example, we're a new AI product, we're going to sell it to companies. Today we're focusing on these two verticals in, you know, this specific geography, and that is a market of $100 million. But then it then kind of, you know, expands over time as we cover more verticals, as we add more to the product, and we can charge everyone more. And so you kind of start low and then expand and become, you know, very big. So that's a credible market size. Another credible thing on market size is pointing at useful analogs. So I'll give you an example of this. When Instacart came in at Series A, I mean, I got to say, I went into the meeting very skeptical. I was kind of like, this thing makes no sense. And Instacart, for people in Pakistan who haven't come across, is a food delivery company. And the unit economics of delivering food are very, very difficult. Delivering groceries are very difficult.
Right.
More challenging than hot food, the restaurant food, for a bunch of reasons.
And tried before, by the way. So there's been no shortage of companies that tried to do some degree of delivery, you know, whether it's Cosmos or Urban Delivery or any of these companies have done it before. So you go into this meeting, you've seen a bunch of car crashes, with all due respect, and now you're seeing a company. So yeah, talk to us about that.
Yeah, well, two things stood out. One was that Apoorv, the founder, had really thought it through. I mean, every objection, every question, he had just looked at this business from every angle. And you could tell this is someone who isn't just really bright, doesn't just have some relevant experience from working at Amazon, but has really been immersed in this for a period of a year or two to really have figured out why this, how you can pick a way through the minefield, if you like. But the other thing, the fact that stuck in my head, so and this comes back to the market size question, the thing that stuck in my head was when someone mentioned, and I don't remember if it was someone on the investment team or Apoorv, but someone mentioned that the convenience store business in the US is a $73 billion business. And I thought to myself, so people are willing to spend $73 million driving to a horrible convenience store and buying stale chips. Why would they, and overpriced stale chips, because these convenience stores charge premium for being open at night. Why wouldn't they want that delivered? And so it just, these types of, you know, analogs and then the bottom-up market sizing, I think, are the most relevant.
Right. And so a couple of lessons from there. One is you've got to know the business at level of multiple layers, at a level of depth. And just being able to talk about the TAM at a high level doesn't resonate. And
yeah, I mean, I would just say on that, if an investor ever asks you a question that you haven't thought about already, that should not happen.
Great advice. That's great advice. Let's talk a little bit about, you know, shifting gears a little bit. You moved on to the venture side. First question is, how was that transition? It was several years ago. Now you've been in it, and you know, I think a lot of people, especially myself, made that transition, at least from operator into venture. Still, the feedback loop is pretty long. So let's just talk about you know, how you made that transition across, and what it takes to make those transitions. And then second, really, let's just talk a little bit about how you're kind of seeing the environment, from, you know, especially when it comes to venture. So it's because there has been, again, a tremendous amount of changes that have been happening. I mean, I've read a report, of course, published earlier this week from PitchBook about first-time managers who had raised their first fund in 2018, 2019 will have struggled joining. So one is how you made the transition and how that went. And then second, really, let's just go into the environment itself and how you're viewing it and have a conversation there.
Yeah, sure. So on the transition, it's just disorienting. I mean, I'm sure you found this too. It's a different way of thinking.
Yeah.
I felt as an entrepreneur, you know, I want to be optimistic. Investors tend not to be optimistic. As an entrepreneur, I'm making quick decisions, and if they're wrong, then I just change the decision the next day. But better to act and to move forward than to not. As an investor, you make few decisions, but they're irreversible decisions, and so you have to think about them very hard. As an operator, I don't know, you just have this joy and the satisfaction of building things and working with people and driving outcomes. As an investor, you have to accept you are not running the company. You are not making decisions. You're very much an advisor and a strategist and a kind of intellectual thought partner for the founder who's making the calls.
Did it take time for you to get into not wanting to get out of your chair and say, okay, let me help
Oh
you out
yeah.
what you're doing?
No, yeah, 100%. I mean, otherwise I'd join the board of a company and I'd be going, oh, great, let me go meet all the management team, let me review the operating plans, let me get in here and see how I can help. And my partners at Sequoia were kind of like, no, you mustn't do that. You do that and they think you want to fire the CEO. You need to operate at the higher level here. So so yeah, no, definitely it was definitely an adjustment.
Well, you've seen cycles in venture as an investor, and then some major shifts, most notable of AI. We'll talk about that in just a bit. Tell us how you're seeing the environment. I mean, kind of crazy out there to a certain extent.
In the environment, I think there are two environments. There's AI and there's everything else. In AI, it is 2021, meaning everything's good. Speculative projects are being funded. There are rapid markups. People are paying giant multiples. There is unfettered optimism from the public markets, as NVIDIA's earnings yesterday, right the way down to seed stage companies. So that's AI. Outside of AI, it's really tough. I mean, there's been a significant reset. And the thing I sympathize with that is so hard is that the goalposts have completely shifted on people in the middle of the game. So people could have raised whatever, a seed round, an A round, whatever round, with a set of milestones to achieve in 18 months. They can now achieve those milestones and people could still not be interested in funding the company because the goalposts have shifted and people are being much tougher than they were at the time that the previous round was raised. And so that's hard. That requires kind of, it kind of like creates this whiplash that, I empathize with entrepreneurs because companies have been set up in a certain way to achieve certain things. And now to change that, there's a human cost. I mean, it involves a lot of painful decisions. And so I would say there are two markets that you can't talk about as you can't average out because they're very different.
Right. How do you look at, feel free to comment as much or as little. I want to be respectful of a lot of our peers, but how have you seen, I followed the venture industry for a couple of decades, and followed people like yourself in your background until I showed up there. But I didn't hear about funds, basically going down. Maybe it's more public now than it is before, but being managers not wanting to raise their next fund or others. Are we going to probably see more of this? Is there just more compression? Is this just a reaction to LPs deciding venture as an asset class? They just want to kind of double down on some very specific funds. What's your take on this?
I think it often, I think it's happened through history. Venture firms, people think of them as being very permanent. They're much more fragile than people imagine. They're small groups of people who agree to work together. And if those people, let's say you have a small group of people who agree to work together, and then half of them get very rich, and then suddenly the idea they got to do the same amount of work and get paid way less. Well, some of them decide they don't want to do that anymore. So the firm breaks up. It's kind of, I think it's just or some of them have, been investing for a long time and haven't been very good, but it's been easy to raise, and now suddenly it's hard to raise, and they don't want to do that. So yeah, I think there will be more firm breakups. I think it's a good thing. I mean, why should founders be the only ones who suffer or the consequences or who deal with economic cycles? The venture industry can deal with that too.
That's fair. Couldn't agree more. And yeah, I think the reality is the feedback loop in venture is what it is. You have to make outsized returns for your investors, and if you're not, then it's totally logical for why an LP would probably not want to back you. So the math will kind of speak for itself. Speaking of math and actually predictability, let's go into AI. There's a bunch of areas in AI which interest. I mean, there's a lot going on. I would say it's perfect. You've perfectly timed and said it's like 2021. What areas of AI have been exciting for you?
Well, I think there's what's been exciting and then what will be exciting. So what's been exciting for the past couple of years have been some of the more infrastructure layers as some of the foundations have got built out. And these could be foundation model companies. We've backed one called Contextual, which is a team out of Facebook. There are infrastructure companies around the care and feeding of models, and we've backed a couple of those, Clean Lab and Unstructured. But I think what's most interesting going forward, and maybe most relevant to the group, is the application companies, because there are whole categories of applications that could be reinvented using AI, and so that's probably the area that we're focused on most.
How do you view the market in terms of AI when it comes to the fact that on the infrastructure layer, you've got NVIDIA, it's kind of owning a large part of the infrastructure area. Then you've got the cloud providers and AWS, Azure, GCP. I would put Oracle in there as well with a lot of the capacity that they've been able to provide.
Yep.
And then hiring people in this space is exceptionally, it's even harder than it was to hire an engineer back in the day, in 2015 onwards, when it was just super hot. Engineers were very difficult to hire. So, one is you've made a bunch of investments in across the infrastructure layer and at the core, but is maybe a contrarian viewpoint is like, what can a standout team actually do to be able to actually move the needle forward when you've got so much of the center being owned by some sizable companies who actually have probably a very sizable influence in terms of where this market goes?
Yeah, I mean, I'd say that NVIDIA is in a category of its own because it has such a chokehold right now, and
it's NVIDIA and everybody else, basically.
Yeah, I mean, so I wouldn't recommend trying to build a chip company right now, although there are some chipping or trying to do that. So I put them in a different category. For the cloud providers, I think it's a different story. The cloud providers can be a distribution vehicle. They're primarily distributors. They don't need to build most things, and they've partnered with pretty much every promising company partners with a cloud provider for distribution. And so I think they're a route to market would be
right.
I don't think they're a competitor because they don't have the wherewithal to build a lot of this stuff. And then, in terms of what is possible to build
I'll take a pause there. Let me just stop you there for a second, because we had this conversation just about a year ago, and you framed it very well, which is that OpenAI came out with something, and there were just under 400 people at the time.
Yeah,
and I think it's been in a generation a company that's captured that much mind share.
Exactly. I mean, OpenAI, yeah. So if 400 people can beat $1 trillion company like Google, then why can't that happen again in some other area? So I think
what they've built is phenomenal. I mean, you could, every time you start, I mean, maybe it's, I'm not a bias, I'm not a shareholder, of course, but you sort of kind of wait for the next model to come out, and they're like, oh, well, we just announced this, whether it's the GPT store or it's, Sora or GPT-4, etc. I mean, it's quite mind-boggling in terms of just the levels of what they're shipping out.
It is great. It does make them a competitor to startup companies. But just like Snowflake beat Redshift, if you're 11 Labs, you have to build a better audio foundation model than OpenAI can. Or if you're Runway, you've got to build a better image and video model. And so, that's the challenge. OpenAI will set the bar, but if you're a focused, talented team, I think you can do it. I think it's less relevant to the general audience because it takes very specific skills to compete in those areas. You can't just wake up one day and start a company there. You have to have some background in it.
A lot of
applications, though, I think are accessible to anyone.
Applications. So you're talking about companies that are wrapper on top of OpenAI, or both more workflow?
Yeah. So here's the big thing I've learned over the last year. I thought lots of people would be training their own models, and turns out that hasn't happened. And the reason is that you can get very far with prompt tuning on a GPT-4. And so what's happened is that at an application model level, it makes more sense to build on one of those foundation models with prompt tuning than it does to incur the time and expense to then. So then, those companies historically, some of them have been dismissed as quote wrapper companies. But I think you have to differentiate between thin wrappers and thick wrappers. Thin wrappers are you're just reselling GPT-4. That is not sustainable, as Jasper's previous business would tell you.
Yeah.
I think there's scope to build a thicker wrapper that is, though, something that could sustain. And the thickness comes from difficulties with integrations and dealing with data. Where do you get the data to feed into the model, whether it's for prompts or for tuning? Let's just say for prompts. Getting that data involves usually integrating with a bunch of different sources and then creating a common data model and then finding, kind of putting it in a format where this data is kind of available and flexible enough to be useful to a model. That is very hard. So that's number one. Number two, tuning the prompts with context windows getting bigger and bigger. Your prompts can now become much more sophisticated. And so there is potential IP you can develop around that. And then finally, the presentation layer, how you present data to a user really impacts how they perceive it. And so, I mean, Copilot's a good example of this, where Copilot started out as being the default, and it drove people nuts because it's not right often enough. They turned it into a recommendation, and people were thrilled that it's right half the time. And so how you present to a data, I mean, why have a menu, for example? I mean, a menu itself makes no sense in an application. The app should just know what you have context, and it can take a series of steps. And so I think that what we're going to see is the venture industry first write off apps as being wrappers and therefore not interesting, and then wake up to the fact that no, that there are differences, and that these what I'll call thick wrapper companies can be sustainable. And the reason why they're so interesting is that you don't need to be an AI person or a technologist to start one of these. What in fact is more important is having domain expertise and a detailed understanding of users and workflows. And so just as in the previous wave, if you think of social mobile, yeah, there were some people like the guys, some people very producty who started them, but there are also MBAs for the first time who started great businesses like DoorDash because they're operationally intensive. Here, I think you can have AI-powered businesses that are not AI researchers. They're going to be product people or industry domain experts who have an intuition for the user. And so that's where I feel, and then there are just so many opportunities at the application level. You can take things that used to be services and turn them into software products. You can take sectors of the economy like healthcare, which are totally dysfunctional, government procurement, and just have all of that now run in software in a way that wasn't possible before. There are just tons of opportunities.
You were an investor in Thousand Eyes, is that, and Sky. You've done some investments in cyber. How do you look at the cyber industry when it comes to the AI industry now? Because it is a different perspective in terms of how you need to be able to secure the models and being able to, the kind of different threats are, I would say, quite different. How do you view that?
I mean, I think it's a huge opportunity, I mean, it's a whole new attack surface that has to be protected. And usually it's a new attack surfaces where there's opportunity. Cyber is very concentrated. 4 or 5 companies between Microsoft, Palo Alto, CrowdStrike, Fortinet, they control half the market. And so it's very concentrated as an industry. Where there's opportunity is when there's a new attack surface or a new vector of attack. So, like ransomware is an area we've been investing in as a newer threat, and then these models are a second.
Are you concerned about regulation or talks of regulation in this area? I mean, you and I both grew up in the UK. Data Protection Act was then 1998, way before anything about GDPR came into place. So I've been much more, at least, aware of it when I was a CIO and rolling out, data privacy and compliance solutions. Clearly, a lot more talk about it in terms of impact, and I think this has been a really platform shift when it comes to impacting industries. How do you look at regulation when you think about investing or whether those are, a headwind in some way, shape, or form, or do you?
I don't worry too much about regulation, to be honest. I kind of feel like GDPR, total waste of time. I mean, it didn't really impact much. Somewhat helpful to incumbents, which I know wasn't the idea, but the reason why I don't worry about it too much is I think there's enough paranoia amongst national governments in wanting to not be left behind around AI and be on the leading edge, that their inclination will be to just leap forward for fear some other country will otherwise. And so even in the US, which is the world's biggest market, I think there's enough fear about what China might do that there's a feeling of we need to be on the leading edge, and so we need to be more permissive.
One of the things that I learned, having watched Sequoia both from a distance, otherwise, I remember Don Valentine once saying that he gave a talk at Stanford where he talked about being involved in investing in in markets where venture capital has worked. It used to be very centric in the US. I'd like to think that that's expanded now globally. How have you looked at from a global perspective? Just Pakistan is just one of many markets you can invest in.
Pakistan it's the talent is global, the ideas are global. I've met some incredible entrepreneurs from Pakistan. The challenge in Pakistan is access to capital. Unlike other markets, unfortunately, the challenge around that is complicated and geopolitical and what have you. For a firm, I think if you're going to invest internationally, you have to be set up for it. Our firm, Bain Capital Ventures, we're not set up for it. Meaning, you can't just show up in a place and assume you understand it. Places are different, cultures are different. So we tend to invest in Silicon Valley and in New York in ecosystems and markets that we know very well. The people that we invest in come from all over the world, but our investments at early stage certainly tend to be concentrated in those markets because we have relationships, we have so many touch points, and then we can also help those companies more because everything we know is much more relevant. And so I think that's the challenge, is that most investing is specific and local.
Let me final set of questions that some have come through, and I want to make sure I want to get those to you as well. There's clearly been a bunch of pitches that even for great companies that you mentioned, the anti-portfolio companies that you did invest in at the early stages. You don't have to point to examples, but what were the reasons that, in pitches that you came in, you're like, wow, I would never invest in this company, or, and then I'm not talking about regrets, but if you look back at those and now you would invest at the later stage because you had the opportunity, what happened there that didn't land for you to be able to go forward and make an investment in? And what are the mistakes that these founders, a lot of founders are pitching, like there's hundreds of thousands of them. Give us some advice here of like, hey, make sure you definitely do this.
Well, I think let me start on the positive. Like the best thing a founder can do is share some non-obvious insight that changes how an investor views an area or a space or a market. So something coming in, so for example, like coming in today and saying, enterprise AI is going to be huge and everyone needs a co-pilot is not, particularly relevant. In 2021, coming in and saying, have you seen the results from GPT-3? Like if you put something into that model, it can spit out all these interesting things. And this is going to change how people do X, Y, and Z. At that time, that would have been an interesting insight because not everyone had woken up. It was there. GPT-3 came out in March 2020, but not everyone had woken up to it. And so having some insight, it doesn't have to be technology, it could be market, could be human behavior, it could be anything. Having some insight that is non-obvious, that expands an investor's understanding. That's number one. Number two is demonstrating depth in how you've thought about that area so that you've considered every angle, and you give the investor confidence so that they walk out of the room. The investor walks out of the room and goes, huh, that was really interesting. I had not thought of that thing before. And if anyone's going to make something work in this area, it's going to be that person because she really understood it from every angle. That's a winner. That's powerful. So that you will raise money.
Feel free to answer clearly. The anti-portfolio, which are the ones that you're like, oh, and I really wanted to bring this one in, or
oh my God, there's so many. But the biggest one is I saw my son the other day, who's now a teenager, and I mentioned the name of a company, and he goes, "Wait, isn't that company where you met the founder and you liked it so much that you came home and forced me to use the product on my first grade project?" And I go, yeah, I did like it that much that I made you use it even over over everyone's objection because I thought it was so great. And then I thought, well, why did I not invest in it? And it's because I brought it to our partner meeting and everyone was kind of like, this country's in Australia, they've got operations in the Philippines.
Oh no.
Yeah, and so this was Canva, which we could have invested in at an early round. And so that's probably that's certainly one of my biggest regrets. The other one was Zoom, where we met Eric and really liked him. I had him come in and do a big demo, and then the product didn't work in the demo, which was unfortunate because I'd pitched it as the product always just works, and then it didn't work.
He told me that story actually. And I
Yeah.
didn't realize it, yeah. But I'm glad that Sequoia were involved much later on. So
Yeah.
right, fantastic. Well, super useful. We've got just one final question. What, you're skeptical about a bunch of it. One of the things that I've admired is you've been rigorously focused, about areas that, you and I can at least relate to, exchange notes in. I'm usually taking my notes, whereas you're answering. So I'll caveat that. But you clearly have been skeptical about a couple of areas where you're just not focusing on. Maybe that's investment strategy. But if you look at broad basics, where do you say, well, I'm just not going to focus much more on that, or because you've talked about AI and everything else. So the areas that you haven't invested in, for example, I don't think you are a big crypto investor like Tim Draper is, for example, but because of the breadth and depth, I mean, from garden health right down to security, you've had a very large vantage point. Areas that you're not really excited about or think, well, I'll probably spend less time there.
Yeah, I mean, the areas which I just don't know as well. And so it's not that I don't think they're exciting and our firm invests in those areas, but I personally, so if it's
Right.
where do they're two separate questions. One is areas I don't think are very exciting, and then there's areas that I would not invest in. So the areas I would not invest in are quite large. It's like I wouldn't invest in fintech, but that's because I don't understand fintech deeply enough.
Right.
Generally, I want to invest in areas where I feel I can actually be helpful to a founder, that my prior experience, my prior knowledge can help them build a better company. And so that tends to be around, applications, infrastructure, some work in health. And recently a lot of AI. I tend not to do systems, chips, because consumer and fintech. So those, but I think there is promise in those areas. It's just I'm not the right person.
Right. So final question for you. If somebody came up to you right now and said, I want to build a data center automation company, like you had built, they said, I want to build the next Clearwell, CenterRun in the areas that you did, what would your response be to that?
Well, I'd say that ship has sailed. This is, you need to be looking forward, not backwards, is what I would say.
I was waiting for you to say that because I think that's been one of the things that I learned when a lot of people asked you about whether you wanted to ever go back into operating or otherwise. And you said you don't tend to look backwards, you tend to look forward. So that's pretty good advice, both for founders and for investors as well. So first of all, thank you so much for making the time. Really appreciate that. A lot of people, a lot of good takeaways. I'll definitely be writing those up. Looking forward to hopefully collaborating with you a little bit more this year. But thank you both to your kind of advice to founders and to VCs like myself. We're much better for it. So really appreciate that.
Yeah, thank you, and thanks to everyone for coming. And I hope there was something in there that was helpful for everybody.
Absolutely, a lot of it. Take care. Thanks very much, Aaref.
Thanks. Bye-bye.
Bye.